Kenya's public debt to gross domestic product continues to pile, with varying estimates putting it at between 52 to 56%. This has caused concern, with various local and international agencies calling for caution. However, despite debt fears raised by the International Monetary Fund, World Bank and most recently the African Development Bank, the National Treasury has remained adamant that Kenya's debt is serviceable. Currently, top Treasury bureaucrats led by Cabinet Secretary are in Washington to market Kenya's second Eurobond debt, which seeks to raise between $1.5 and $3 billion. Kenya's foreign debt stands at close to 3 trillion shillings, which is set to rise with the planned Eurobond and borrowing from the domestic market. Investment and real estate firm Cytonn says Kenya's continued investment is yet to have an impact on the country's growth, with expected GDP growth of 5.5% this year, which is the slowest expansion in 7 years. Next week, top managers from the International Monetary Fund are expected to meet in Nairobi with the National Treasury to discuss the thorny issue of the budget deficit.
Despite all the challenges we are facing the year, as a way of summary, economy remains strong. Fundamentals are very solid, and we, of course, expect a speedy conclusion of this electioneering issue, and hopefully our economy should recover fully to the trajectory that we had expected early this year.
A shortfall in tax revenue has resulted in a widening budget deficit, despite goals to reduce this to 3.4% of GDP by the fiscal year 2020 to 2021. The deficit, which currently stands at 7.9% of GDP, is being plugged in through borrowing both locally and from external markets. Last week, a debt management report by the National Treasury said Kenya borrowed more than 700 billion shillings from the international market, with China lending the country more than 500 billion shillings.